This week, I took 5 trades on the E-mini S&P 500 futures, and every single trade's followed by the same process. There were no random entries, no guessing, and no chasing the market. Every trade started with identify high probability location using my statistics from statsterminal.com. Then I waited for the market profile level or finally the order flow to tell me whatever buyers or sellers were actually taking control. In today's video, I'm going to walk you through every trade that I took during the week. I will explain exactly what I was looking before entering, why I decided to take the trade, and how I managed the risk, and also what I learned from each setup. Hopefully by the end of the video, you will see that profitable trading isn't about predicting the future. It's about waiting patiently for the high quality opportunity where multiple factors lines up. Let's jump into the charts. So before we go through each individual trade, I always like to start with the bigger picture. Every weekend, I build a trading plan before the market open on Monday. I'm identifying higher time frames, support and resistance, important market profile level, and value area high, value area low, point of controls, high volume nodes, low volume node, etc. I also review overnight statistics, initial balance, RTH open statistics, 4-hour statistics, and time of the day reversal statistics. You can find all those statistics on statsterminal.com. All of these tools help me identify areas where the market is statistically more likely to react. Notice that I said more likely. Statistics never a guaranteed trade. Instead, they tell me where I should start paying attention, right? Once price reach one of those locations, I completely switch my focus to the order flow. That's where I look at aggressive buyers, aggressive sellers, absorption, exhaustions, and whatever large participants are actually doing. If those pieces don't line up, I simply don't take a trade. Patience is a huge part of my strategy. Now let's look at the first trade. The first trade is based on time of the day reversal. It happens to be one of my favorite setups. Price was approaching a major 4-hour resistance level that I had marked before the session even started. At the same time, StatsTerminal was showing one of my highest probability time of day reversal window, which is around 650. Whatever multiple factors begin to line up like that, I know it's time to pay attention. That doesn't automatically mean I'm entering a trade. It's simply preparing to enter a trade. As price reached resistance, I shifted my attention to the order flow. Instead of seeing buyers lifting offer aggressively, I noticed sellers beginning to absorb the buying pressure. Large sales orders started appearing, as you can see in the big trades. Buyers were unable to push through the resistance, and the tape began to show in slowdown. That was my confirmation. I entered short. My initial stop stayed above the resistance area because if buyer actually break the level, my trade idea will be invalid. As price moved lower, I started scaling out. I like paying myself along the way instead of trying to predict the exact bottom. Once enough profit was locked in, I let the remaining contracts run while I'm trailing my stop behind the structure. Eventually I was stopped out with a solid profit. The biggest lessons from this trade is location comes first, right? Order flow is only confirming what statistics has already suggested. Now for the second trade. The second trade follow almost the same exact process but in reverse. After testing the highs, the market auction lower and basically towards the overnight low. What's interesting is that this wasn't just one support level. Several important reference levels were lined up in the same area. We had multiple 4-hour support level, the overnight low, and price move outside value. Whenever I see a several support level clustering together, I know the area deserved my attention. Again, didn't buy immediately. I waited as price reached support. I watched the tape. Large buyers begin to stepping in. You can see it in the big trades right there. Selling slowed noticeably. Aggressive sellers were no longer getting continuation. And that was the confirmation I needed. I entered long. The market moved higher. I continued trailing my stuff underneath the higher lows. One thing I learned over the years is that if buyers remain in control, there's no reason to exit too early. Instead of guessing where the move would end, I simply let the market tell me. The third trade, the opening range breakout. The third trade came after price spent some time consolidating near the value area. Consolidation is very important. It's often where larger traders build position before the next move. Rather than anticipating the breakout, I waited for the confirmation. The breakout occurred with a strong buying pressure. Prices reclaim VWAP, buyer stays above an aggressive level, and the order flow confirm initiative activity entering the market. Only then I enter the long trade. Once momentum continues, I trailed my stop underneath the initiative candle. This is one of my favorite ways to manage trend trades because it allows me to stay with the winning position while protecting my profit. The key lesson is simple. Breakout without participation often fails. Breakout with aggressive buyers supporting the move have much better odds. The fourth trade was initial balance pullback trade. Another favorite set of mine. After the breakout, the market pulled back towards the initial balance. Instead of collapsing lower, prices accepted around the IB and started to build a high volume node, as you can see on the chart. That's important. A high volume node tells us exactly that both buyers and sellers are agreeing on a value, right? Eventually that balance break, and the only question is which side wins, right? I waited patiently. Once buyers regained control and the order flow confirmed the initiative buying, I enter the long position. Again, I wasn't trying to predict. I simply waited for the market to reveal the intention, basically. As price continue higher, I managed the trade exactly the same as my other trade. Consistency in trade management is a key in my opinion. For the fifth trade, and actually the final trade, it happens after price move below value and another area of major support zone. Whatever the market trades outside value, I always pay attention to that. I'm also asking one question. Is this acceptance move into a new value area, or it's simply an auction that has gone too far, right? As price reached support, the order flow gave me answers. Selling pressure began fading. Buyers started absorbing the market sellers. Large orders appear on the bid, and price stopped making meaningful progress lower. That was enough confirmation for me. I entered long and managed my position exactly as I always do. One thing you'll notice across all 5 trades that my process never changed. Different setup, same execution. As far as the weekly lessons, looking back at the week, there are 3 lessons that stands out. The first lesson is location matter more than indicators. Most of these trades happen at areas when multiple pieces of information line out. Whatever that was a higher time frame support and resistance, value area, high and low, VWAP, initial balance, or overnight level. The second lesson is that order flow without context isn't enough. Seeing aggressive buyer or selling means very little if you don't know where it's happening. Context gives order flow meanings. Finally, statistics provide the roadmap, but they don't replace execution. Statistics tell me where I should expect opportunity. Market profile help me define the structure. Order flow provide me with a trigger. Risk management protect my account when I'm wrong. When you combine all 4 pieces together, trading becomes much more objective and much less emotional. Thank you for watching. If you enjoyed this video, please like and subscribe. And also, if you want to learn more about statistics, market profile, and everything I discussed in this video, go to statsterminals.com, and I'll see you at the next video.